So I think overall it gave a pretty good answer in regards to that. However, I do have another bit of a lead in, continuing on the cryptocurrency thing for just a moment. So we asked ChatGPT, is cryptocurrency appropriate for 401k accounts? And its answer was, as a financial advisor, because remember, we told it to speak in the voice of a financial advisor to get around it's not being able to answer financial related questions because it's simply a language model, etc. It says, as a financial advisor, I would generally recommend against investing 401k funds in a cryptocurrency due to the high level of risk involved. 401k accounts are meant to be a reliable source of retirement income, and cryptocurrency's volatility makes it an unsuitable investment for long-term financial planning. It's generally best to stick with more traditional investments such as stocks and bonds, which Colin has mentioned multiple times, within a 401k account. So I'm guessing you're like in the cheering section on this one. Yay, ChatGPT.
They did they hit all the major points. I'm just very blown away by the fact that they say as a financial advisor.
Yeah.
Because that's exactly how I would answer all my
right.
my clients and prospect questions.
It's AI.
Yeah.
It's cool.
I mean, I think they're approaching it the right way because there's only a handful of record keepers. So companies that will offer platforms for 401ks, Fidelity, Vanguard, Principal, companies like that. There's only a very small handful, Fidelity being the largest player in the 401k space, but also probably the largest player from a cryptocurrency and offering it as an investment option.
Interesting.
So when we had when we had a meal with our Fidelity reps to kind of talk through the cryptocurrency space and how they're pushing this out to their prospective plans that might be interested in having it, we had a very frank conversation about whether this was appropriate or not. And they assured us that they put enough safeguards in place to say, hey, we understand your concerns. The reason that we're offering it is this. You're only allowed to put a certain percentage of your assets in their cryptocurrency sleeve, we'll call it. And I think it maxed out around 20%. So it wasn't in this particular case that ChatGPT is probably assuming, which is, hey, throw it all into Bitcoin or Ethereum or something like that within your 401k. That wouldn't even be allowed on at least Fidelity's platform, let alone anybody else's. So they did have some safeguards in place, but the reality is that when we make a suggestion to somebody as to how much they should hold in cryptocurrency, because we're not the ones as advisors trading in those securities,
right?
We're only suggesting a couple percentage points of your overall net worth. So considering most Americans with the branding of 401k so strong to be, all my investments, that where at least I'm going to get started is in a 401k. That's where the majority of our retirement assets are going to be. Well, should you even have money in a cryptocurrency then? Because this is very reliant, as ChatGPT so astutely pointed out, this is going to be the majority of your retirement wealth. So it does raise at least the questions as to whether or not it's appropriate. As long as there are safeguards in place, it could make it a little bit safer. But what this does not address at all is the fact that you as a sponsor of a retirement plan have a fiduciary duty to your clients, which in this case are going to be your employees, to offer the right kinds of investment options. And this is where lawsuits will likely happen by you. Hey, you allowed me to put 20% of my money in cryptocurrency at the beginning of 2021, and things worked out really well in the short term, but I'm down significantly.
Sure.
And I'm retiring.
Well, we had talked about the wild swings that it has and that you don't normally see. Again, with the more popular cryptos, like you had said, let's just keep it to Bitcoin, Ethereum, et cetera, because you normally don't see like a single share of a stock go that high, right? Normally they'll split it, whereas the cryptos don't, right? Now they can burn through supplies of it, which is a whole other technical video for another time. For people that are familiar with crypto, they'll understand it, but you won't see a single share of like Google go to $30,000, right? At that point, they're going to split it to where they can double down the amount that's out available in the market. And it's interesting too that while ChatGPT had said, it's generally best to stick with the more traditional investments such as stocks and bonds within a 401k account, they don't mention, and this might be just limited to the data, like the 2021, because things have changed since then a little bit, a lot of it in some ways, that it doesn't mention it might be safe to put a percentage of that, like you had said. And back to your point about it was Fidelity that you had said. It's interesting too. I think they're going to have to start, not to go on a tangent, but I think more people would demand it, so they're just reacting to the market. There's so much money that could potentially be made with it that I think it's wise for them not to ignore it completely, but also to play the safe route of, and like ChatGPT, and you also echoed their point, be careful, right? Don't say my whole 401k is all in Bitcoin, because if you put, $10 million in when it's 60 grand, like, hey, this is going to go to 100 and then it goes to 20, now you're in trouble. And you wouldn't have seen such a wild swing with a traditional stock, because like we had said, the stock price wouldn't go that high for a single share.
Right. And with the stock split, all you're really doing is just cutting it in half, and now you have two shares. It just makes it more marketable to the rest of the community. I mean, that's why Berkshire Hathaway is so expensive, because, well, they don't need to advertise themselves and do stock splits like that. But a Google that might try to get more people involved, try to get some of that good money coming in, which was so free and easy, a couple of years ago, now is starting to evaporate. So starting to pursue those types of strategies are important. But again, I think with the cryptocurrency for 401k accounts, it's really the plan sponsor, the person that's offering the plan to their employees, that is going to be underneath the most scrutiny for offering it. Because even though their employees might be clamoring for, it could be cryptocurrency, it could just be, hey, I've got this one particular mutual fund that I really like that my advisor sold me years ago. I want that now in my 401k plan. Well, it's the plan sponsor's job to vet that fund and say yes or no, or to hire somebody to be the fiduciary on the plan, speak in the best interests of the client, and then choose that investment, or say no, and here are the reasons why. So it's the same concept here. It's just a cryptocurrency instead. So it's really these plan sponsors that need to make good, educated decision, listen to their employees, maybe not always follow all their directions, but if there's a reason to have this, you have tools available. Like I said, Fidelity, I believe their cap is around 20%. You can push that lower. You could say you can only put 1% or 2%, I would imagine. If that's the case, then maybe that makes you comfortable offering something like that, because your employee base maybe is skewing on the younger side, and they're more interested in this kind of thing. And they've got long-term futures, and they say, oh, well, cryptocurrencies are in 4-year cycles, or however we want to put it, that justifies putting it in there. Well, you've got some ammunition to say, hey, we could play in that space, but I'm going to really restrict you on what you're doing. And again, that's for
I think that comes to the individual client and their level of comfort with that level of risk.
Yeah.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. As always, please remember, investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Correct Capital Wealth Management is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Correct Capital Wealth Management and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Correct Capital Wealth Management unless a client service agreement is in place.